Good morning. I'm Joe Brusuelas, Senior Economist at Bloomberg LP, with your Bloomberg Economic Brief Morning Cup of Joe. Today is our Super Bowl here in financial markets. It's the first Friday of May, and we're getting our April non-farm payroll report. So I think what we're going to see is largely a status quo report. And by that I mean we're likely to see upside revisions in the retail hiring data for both the month of February and March that's likely to boost the most recent employment tallies. And what I expect to see is largely a sideways move here this month. I do think that there is some downside risk on this report due to a quicker pace of firings in the JOLTS data, the move in initial claims, and the slower pace of private sector hiring that we saw in the ISM non-manufacturing and ADP surveys. Now, for a point forecast, I'm expecting a gain of roughly 135,000 in total employment, 140,000 in private sector employment, the difference being a loss of 5,000 in government jobs. Now, hours worked and average hourly earnings are likely to increase 0.2%, and the length of the work week is likely to remain unchanged at 34.5 hours. Now, I'm expecting to see job gains clustered around the manufacturing sector, leisure and hospitality, as well as professional business services. Job losses are likely to be clustered in the construction and government industries. Now, that upward division over the past 2 months, along with the total change of employment, is likely to be below the roughly 200,000 trend that we've seen since hiring began to accelerate last September. Now, what that means is that we've got a slower pace of growth in the economy. The data has shown that in the last month of March and the first set of data points that we've seen in April. Now, I think that for investors to move off of this report, we would need to see a decline, the data to arrive at least 50,000 below the consensus 165,000 print, or we need to see an acceleration above that 200,000 trend. And I want to give a hat tip to TJ Marta in our First Word Fixed Income group. He's written a very interesting article in this morning's Bloomberg Economic Brief about the likely reaction to the report amongst traders. I urge you to take a look at that when it's published at 7:30 a.m. I think the major takeaway here is that the labor market continues to grow, but it's just not growing fast enough to bring down the unemployment rate, and that's what has policymakers concerned. I'm Joe Brusuelas, and that's been your Bloomberg Economic Brief Morning Cup of Joe.